Hi everyone, hope you're well. Hope you can hear me loud and clear. The audio sounds a bit strange actually. No, looks all right. Video looks all right. Got a different background on today because I'm in a different location. Hopefully the connection is going to stay up where I am. It's not the best and strongest internet connection, but the view behind the camera is fantastic. Actually, it's blue sky. I can see the sea. I can see a very big graveyard as well, which is a story for another day, my friends. So hope you're all well. It's Monday. It's the 21st of July. The schools here in the UK are in the first day of their big summer holiday, 6 weeks off here in the UK. Yeah, it's been a bit wet this morning, but nice blue sky at the moment. It's 5 o'clock here in the UK. Wherever you are in the world, good evening, good afternoon, good morning, and welcome to our latest webinar. We're going to look at the most important thing, or one of the most important things around success in trading. Actually, probably no, it is the most important thing. It's you. You are the most important thing when it comes to trading. Charts, candlesticks, fundamental analysis, moving averages, whatever it is, all fades into the background if you can't do and understand risk management and money management. But it's the key thing is how you apply it as you as a human being. So that's the most important thing. And the psychology of the funded trader is absolutely fundamental. And that's what we're going to talk about for the next hour or so. It may run over the hour, but I haven't got much more time than now. So if I've still got some slides or stuff I want to go through again or repeat, I'll do another session on this possibly later in the week when we're doing that live trading day on Wednesday. So join me on Wednesday, an hour later, where we'll do some actual live trading with our real platform, and and see how we get on applying the techniques that I've explained in some of the other webinars. So let's crack on. So today we're going to look at, let's say, for me, the most important thing about trading, that's you as a human being. So my background, if you've not heard me talk before, is in the City of London. I spent 20 years with various banks, two major banks, and then I moved the family lock, stock and barrel. We moved to Cyprus at the beginning of the 2000s for a different type of life. Didn't really have a job really to go to, but knew enough about us, my wife and I, that we would get by, and we certainly did get by. I worked for brokers in Cyprus for 12 years, and and now I'm back in London, being first and foremost a granddad, to be honest. It's our grandson. But for me, investing, trading is all about understanding yourself, keeping things probable, keeping things simple, that you understand. Don't overcomplicate it with too many indicators, trying to cram too much knowledge, and trading a time frame, importantly as well, that fits with you as a person, as a human being as well. So we'll talk about that as well tonight. But say principally today, it's all about knowing yourself. Do what's probable, keep it simple. It's all in numbers. Understand the simple numbers of things like margin and leverage. If you don't understand the basics of what's the spread on the asset you're trading, stop. Don't risk any more of your real hard-earned money. Go and find out those basics and get the groundwork done first. Get the foundation set before you try and build a house. Simple stuff. So we're going to look at how to improve your trading mindset today, the importance of trading psychology. I always use the analogy about the trading ocean. I mean, Cyprus is an island. It's surrounded by the sea. I was born not very far from where I'm sat at the moment, right by the sea. The sea is literally 100 meters away from me here. It's the North Sea, not the Mediterranean Sea. But that analogy to trading is very much what I talk about, and we'll talk about that tonight as well. And think in percentages and probabilities. Don't think in making dollars. Don't think in making sterling or dollars or euros or rupees or whatever it is you're trying to do while you're doing this thing called trading. Thinking doing a good job, having an edge, managing your process day in, day out, repeating the same thing day in, day out, because that's what it is. The best traders are some of the most boring people in the world, to be honest. It's because they're repeating the same thing day in, day out. And there's nothing wrong with that. But they're, people with too much emotion tend to burn themselves out far too quickly in trading. And anybody, wherever you are in the world, wherever you're sat listening or watching this, can make a success of trading. Absolutely anybody can do that. And don't let anybody tell you otherwise. What we do here at theproptrade.com is it give you the ability to do that. I'm saying most people have a problem with capital, and the whole trading on prop firms has opened up a big window for lots and lots of people to get involved. And we're here to help you, because if you're successful, we're successful. You tell your friends, more people come, we get bigger, we grow more successful, and we're doing the right thing day in, day out. So that's how we look to grow. So it's a mindset business, this, my friends, and get yourself a mirror. Look yourself in the face. How do you deal with risk? How do you manage risk? You know, can you cope with winning? Can you cope with losing? It's a mindset business. Okay. Once you get that, or that goes click in your head, you can move forward. It's not about, as I said at the beginning, you know, it's not about technical analysis or fundamental analysis, you know, having a strategy, the best EA in the world, whether you're a trend follower, whether it's mean reversion, you know, you've got the best broker, you've got, you know, got the best spreads, you're listening to all these gurus that are out on the on YouTube and TikTok and elsewhere on the internet. They all seem to see and sound the same. They've been doing it for 5 minutes, and they've got the latest Lamborghini or whatever it is car you think you need. You know, a wad of cash, great big fat Rolex. Yeah, they're all great, and they can be attained, and they're, you know, they're things that if you want to write them down in your trading plan, that's great, do it. But you know, most people fail because they don't get these boring things right, these mindset things, these ideas of accepting losing right. You know, it's not about algos, your platform, whether it's, you know, MT4 or CTrader or even TradingView. You know, it's about you. It's all about you. It's none of this stuff that sits around. All of the stuff there, those bullet points are all great, but principally it's about you. It's a mindset business. Steve Goldstein from Alpha Mind 101 on TikTok, or sorry, on X now. He's put all his thoughts over the years into a really good book that he published a couple of years ago. I know he's rewriting some chapters on it as well. I'm looking for a rewrite of that. But, you know, there's two elements to an outcome in a trade. You either win, i.e. the physical, financial gain or loss, and the psychological, whether it's positive, negative, ego, emotion, consequence of all that. The psychology is by far the most important thing. Steve sent a text out this morning, or a X post out this morning. So if the process works, you need to adhere to it, though. Good times and bad times. That requires resilience, mental strength, and a strong mental game. And that's what we're going to talk about tonight. It's all about a mental approach to winning. There's loads of these guys. You know, it's free stuff out on X. Steve Burns, another one's been around a long time. You know, this is one of the best ones I thought Steve put out. Whether it's originally his thoughts or not, I don't know. He might be copying other people, but I mean, that's what a lot of people do. I mean, I do it myself. But, you know, what you're looking for in trading, 4 outcomes: a small win, a big win, a small loss, or break even. You should never experience a big loss. If you get rid of the big losses, you have a great chance of being profitable for years to come. And it's as simple as that. A lot of stuff is overcomplicated and over sort of added to, you know, with indicators or, you know, techniques or different books or different courses. You know, find the thing in all of this morass that works for you. And if it's as simple as, you know, 1, 2, 3, fine, do it. You know, if it's simple as a moving average, do it. If it works for you, do it. You know, it really is a mindset, often considered separate from the trading process. It's not, it's ground zero for trading. You know, my guiding trading rules are no forced trades, no big losses, never average down, don't skip the process, you know, repeat it, you know, find a trade, take the trade, accept the result, repeat it. You know, keep the losses small. Mark Minaveri, again, been around longer than I have, as a very successful trader and author, and again, a great guy to follow. Lots of free stuff, 4 great books he's written over the years. And, you know, what we do tonight, this is all free, of course, but most people would rather pay for getting an alert, pay to get a trading signal, not actually learn anything about themselves or learn anything about trading. Because once you've got this, guys, you've got it for the rest of your life. I mean, I really only started investing heavily or trading heavily in my mid to late 30s. You know, a lot of you, you know, still at university or still even at school, some of you, you know, once you've got this, or you find it, it may take you a while, it may take you a few years, but, you know, you've still got an awful lot of your life still to actually do this. I'm still doing this on a daily basis. I love it. I get a kick out the mental game of it, the mental chess that goes on of trading, the actual physical trading, placing the trades. I still do that manually for most of my systems. You know, it's just something I do. And I fit my life in very much around, I fit my trading very much around the rest of my life at the moment. So we're here to help, guys. We really, really are. Lots of books. These are some of my favorite trading books. The one I talk about a lot and we'll talk about a lot today is Trading in the Zone by Mark Douglas. A book he published 20 odd years ago, no, 2000 or 1999, I think it came out. Absolutely, you know, changed the way I approach trading, and many thousands and thousands, tens of thousands of other people as well. So Trading in the Zone by Mark Douglas, The Reminiscences of a Stock Operator, you know, other books by around Jesse Livermore, and then the great Nicholas Taleb, looking at options and probability in psychology, and the Turtle Traders as well. So lots going on. You know, the crash of the pandemic in the latest crash of the market, you know, huge moves. Lots of people didn't recover from that. Lots of people burnt out. But this is I think this is the third Friday, and this is the Monday, I think it was, or this was the Thursday, and this is the Monday. Massive moves on the markets, and how people reacted and coped with it is, you know, the thing that separates the winners from the losers. Money is made sitting, not trading. That's one of the key stories from the Reminiscences of a Stock Operator, story of Jesse Livermore. Very much the psychology of trading, very much the mindset approach. You know, accept losing. You don't have to be trading all the time, and it isn't a straight line, as this chart here very clearly demonstrates. It's about finding your way. You'll be down here a lot. You'll be down here struggling to find your way, but everybody can. That's the most important thing. You know, over the next few slides, I've got 12 things that I did wrong big time when I first started trading. And most traders will have done all of these things, if not more. I could have done 20 points. I could have done 30 points, to be honest. I call this my dirty dozen, you know, the 12 key ones, you know, and everyone with, you know, worth their weight in gold that's ever traded or ever placed a position in a trade with a broker will have done at least, you know, 9 out of 12 of these. What is your score is my question. You know, as Jesse Livermore said in his book, or the book that was written about him, there is nothing like losing all you have in the world for teaching you what not to do. And that's the key thing about the brain and the mindset when it comes to trading. You know, when it's a question of money, everyone is the same religion. That's the thing. It's about risk management. It's about understanding yourself. It doesn't matter who you are, where you are in the world, your race, your creed, your color, your sex. It doesn't matter. It's finding about who you are. I'm a big believer that females actually are physiologically better designed to be traders than men. It goes against the grain. Lots of people ignore that, saying, well, you know, when men are risk takers. We'll come on to that in a minute. So 12 key points here. First 4, you know, most people come into this business with expectations that are far too high. They might invest, say, $1,000 wanting to make $500 tomorrow. You know, you know, most prop firms have, you know, a minimum trading of 3 days. You know, even that, you know, it's a really quick turnaround, even for a 5-minute, 1-minute scalpers. You know, trying to make the return on your capital or become a funded trader, whether it's 1 step or 2 step in, you know, less than 3 days. Oh, come on, guys. You know, even that is very quick. So it's the fact that people, wherever you are again in the world, you know, they will put this massive expectations on themselves, and their expectations are too high more than anything, rather than too little capital. The the prop trade business has sort of addressed this lack of capital for most investors, but still the human side of it means you're pressurizing yourself to do this quickly. We see that all the time on our Discord group. What's the minimum trading time? What's the minimum trade time? How long does it take me to get funded? It's that psychological pressure you're putting on yourself all the time, whether you're a successful trader or whether you're starting out. It's not going to work. Ultimately it'll catch you out. And then the other key thing, or a very, very key thing there, is number 2. People tend to risk too much. They will risk far too much on individual trades. We have a rule here at theproptrade.com that we don't want you risking more than 3% of your entire of your account on one particular trade. Lots of people get really uptight about that, but it keeps them in the game. So they've got to stick to the rules. That's one of the big benefits of the proptrade.com, that we won't let you risk more than 3% on a trade. We'll close the account. You'll breach the rules. Okay, in other trading platforms, whether they're trading or with with CFD brokers or with futures brokers or with options brokers, people will tend to risk far too much. Instead of risking 1 or 2% of their account on a particular trade, they might risk 10, 5, 10, 20, 30% of their account on one particular trade, thinking this one is going to get me back. I've had a run of losing trades, and you end up blowing everything. Keep your risk small. You can get rich, very, very rich, risking 1 or 2% of your account, my friends. I'll just show you the maths later on. It's very, very straightforward. A lot of people do that one as well. Number 3, overtrading. I was as guilty as anybody at risking too much and overtrading, trying to get even, thinking the market owes me something, trying to get my losses back, think, I've lost 20 quid off 2 grand or 20,000 pounds. I need to get it back. How do I get it back? I'll do another trade. But not having a process, not having a process or a trading approach. Or even if you did, not sticking to the rules of that approach, waiting and applying it. That's the key thing. There's thousands of successful trading systems. Literally thousands of successful trading systems and approaches. People are always saying, which is the best? Which is the best? It doesn't really matter which is the best. It's the one that works for you. That's the key thing. But can you make it work? I've sat in trading rooms before, teaching rooms, seminar rooms, face-to-face with people. Everybody's got their laptop. There's 20 of us in a room. We're all looking at the same. We've all followed the same rules. Have all followed the same presentation I've done, or the strategy we've talked about. And 3 people will make money and 17 will lose money. Why is that? Because people can't follow rules, or won't follow rules, think they know better, or think they'll risk a bit more. So, overtrade is absolutely fundamental. And then there might be the other one is that, trading a time frame that doesn't fit their personality. Everybody seems to think that everybody gets attracted to scalping or intraday trading. There's some significant benefits to scalping, significant benefits to intraday trading, but it's not for everyone. Not everyone can do the cut and thrust of short-term multiple trades day in, day out. It's not for everyone. So find what works for you. Similarly, not everyone's designed to be, wait for the turn in the market or the swing trading points and can, invest heavily in a key turn in the market, or catch the bottom or near the bottom of a move in the market, and then just stay with it for weeks on end, sometimes months on end. Sometimes that isn't what everyone's cut out to do. People want the action of trading. So find yourself. That's what we're talking about tonight. Find yourself, knowing yourself. And lots of what Mark Douglas talks about in Trading in the Zone is all about finding yourself. At the beginning of the book, there's a very simple yes or no 30 question questionnaire. And do the questionnaire before you read the book. It's also then printed right at the end of the book, and you'll be amazed, my friends, about the difference in some of the answers you will give at the end of the book if you're applying what Mark talks about to the answers you've given at the beginning of the book before you've actually read the book. So it's all about understanding yourself, all about getting this winning attitude, and risk management is absolutely key. Another great book I read right at the beginning of my trading career, and Bruce Covenor gets quoted quite a bit tonight, is the Market Wizards series. Jack Schwager interviewed some of America's top traders back in the late 80s, and there's about 7 books in this series now, the Market Wizards series by Jack Schwager. He's a successful trader himself, futures trader. But as Bruce, when I first read this really struck home with me. Bruce Covenor's quote. There are, my experience with novice traders is that they trade 3 to 4 times too big. They're taking 5 to 10% risk on a trade. So just look at your account. Are you risking 5%? When they should be taking 1 to 2%. As Bruce says, he doesn't trade for fun. He trades to make money, and he's got very, very rich with very, very low risk management. So have many, many traders. And I'll put myself in that phase as well. It's not the strategy that wins big, it's the mindset. We do not see things as they are, we them as we are. We do not see things as they are, we them as we are. There's a word missing there. We see them as they are. Okay, Aniston, deep lady. We spend far too much time preparing our charts, our analysis, watching the news, listening to CNN, watching interviews on Bloomberg or whatever. It's not charting, it's not fundamental analysis, it's all about you. That's where the fundamental difference can be made. So think about yourself, look inward, get that mirror that we said on the very, very first slide tonight, and look at that. Okay, so they're the first 4. These are not in any particular order. I've looked at tens of thousands of trading accounts over the years, and most, you'd be amazed, vast majority of people, 80-90%, if not more, trade without a stop loss or without a take profit. They have no idea where they're getting out, whether they're winning or whether they're losing, and that's just eating away at you mentally and emotionally. All this nonsense about brokers go stop hunting, they know where my stop loss is, the takers out. Brokers don't care. There's millions and millions of trades, thousands of millions of trades going on every trading day and trading week. And it's just computers trying to fulfill all these orders that are out in the marketplace. It just is what it is. Have a physical hard stop, because 99% of the time, if it gets hit, you'll get taken out. Obviously, slippage occurs, and that's just the nature of the market. Slippage occurs both positively and negatively, but it's just part and parcel of trading. So the key thing, the absolute key thing, if you want to take one thing away from today's webinar, is I've already said it 100 times, haven't I? Keep your losses small. Keep that stop loss. So where the stop loss is on your chart, make sure that that's only going to be a 1 or 2% loss for that particular trade or that particular account. If you've got a lot of trades open, you've got 5, 6, 10, 12 trades open, as I have sometimes, you've got to then correspond the stop losses and the amount of risk per trade. Usually all 12 trades have equal likelihood of winning or losing, so you divide it in simple division across all of the risks. But keep that total loss potential. If all 12 went wrong, or all 7 went wrong, or all 5 went wrong, how much would you lose, and can you cope with that, both in percentage terms and in absolute terms? So that's the key thing, as it says there, number 7, accepting losing. That was one of the big problems I had when I first started. I couldn't accept losing. I wanted to win. I wanted to be right more than anything. That was one of the big problems that I had getting over. It wasn't the losing the money. Obviously that hurt, but I knew I had enough about me to go and earn some more money so I could go and reinvest it all. It was being wrong. And again, that was when I looked internally. It's because of my, the way I'm built. I'm a bit of a big head, a big head, as we say in England. I wanted to be right all the time, a bit of a know-it-all, a bit of a told you so sort of personality, unfortunately. My wife drives her mad, obviously. God bless her. We've been together for 40 years, but still drives her mad every day. So you've got to understand yourself and accept that you will lose, and you will lose a lot. Okay, you've got to accept that losing. That's the key point. Can you cope with losing half your trades. We're not designed. We're not, school, university, whatever type of education we've got. It doesn't design us to be losers. Whereas in trading, you get a lot of losing trades. You've got to be able to cope with it. So although most trades have about on average about 54% win rate, they still end up losing money because they're losing much more money on their losing trades than they are in their winning trades. I've written there 60% win rate is not enough. 6 out of 10, it wasn't good enough at school, is it? Getting 6 out of 10 in your tests at school, or 60% took your test home for mum and dad. It's not good enough. That's why you see all this stuff on the internet. Oh, it's a 95% hit rate. This latest robot, this latest AI trading mechanic, has an 80% hit rate. That's all well and good if it manages its stops properly, it manages its risk management properly. That's fantastic. But usually, something that is too good to be true usually is. And how long has it been trading in the real world? How much real market analysis has it done? How much real market trading in the real cut and thrust of the trading world has it got, or have they got? So you've got to be able to cope with losing, and that's what most people find very, very difficult, because we're human beings. We're not designed to be losers. Nobody wants to be a loser. But if you can cope with losing 4 out of 10 trades, you can go on to be a very, very successful trader. Have a plan, write stuff down, what works, what doesn't work. I just want to make money isn't good enough. It doesn't have to be very long. 3 pages is more than enough. A page is probably a wee bit too short. Have a plan. Just to say I want to make money, isn't good enough. And number 8, principally, this is a soft skills business. So you've got to have those things, or things that we're not good at as human beings: patience, discipline, ego, for God's sake, excuse me, is one of those absolute killers. And that, again, for me, wanting to be right all the time, you got to leave it outside of your trading platform. And too many people are in a hurry to make funds. Even the 3-day rule drives some of our traders wild. You've got to get what works for you. If you're and find that there's no rush. This is very much a marathon, not a sprint. That quote there, turning the telescope around, it was in one of Anna Cooling's first books that she wrote about the introduction to Forex. Lots of people only focus on winning, focus on how much money am I going to win on this trade when it comes right. The professionals, people that have been doing it a long time, people that are successful day in, day out, week in, week out, month in, month out, they turn the telescope around. They focus on how much will I lose if this trade goes wrong? Can I cope with that amount, whether it's percentage, whether it's dollars? If I can, fine, I'll take the trade. If I can't, I reduce the lot size. I reduce the amount of risk that's out on the table. So I'll live to fight another day. Patience, discipline, not wanting to be right all the time. They're all absolutely fundamental. Okay. There's a really good survey done a few years ago. I think it was 2018, 2019, where they looked at 25,000 traders, this particular broker, 43 million trades over a period of 15 months, all different types of trades. Most of them were Forex, but they're all different types of commodities and indices, futures contracts as well. And it found that of the 25,000 traders, the 43 million trades over this extended sample size, they had a win rate of 62%. 62% win rate. However, most of them lost money because on average, they were winning 48 pips, as you can see there on the slide. On average, they lost 82 pips. 1.7 times more, nearly twice as many pips was lost as won. So although they were winning 62% of their trades, ultimately they were losing. Again, simple maths. I'll do the maths. Imagine if that was reversed. Imagine if you had an average win rate of 62% and you were winning 82 pips on average and losing only 48 pips. You know, happy days. It's as simple as that. What are your numbers, my friends? What is your win rate? What is your average pip win? What's your average loss win? How many losing trades you have in a row? How many winning trades you have in a row? If you don't know all those sort of numbers, find it out before you risk another single cent. Understand your numbers, understand yourself, and accept you'll get a lot of losing trades, because that's the key thing. It's not the winning. Well, it is the winning numbers. It's the losing numbers that really eat away at you. Why you got it wrong? What was wrong? So what is your answer? Fill in that first column there, my friends, and I'll be interested for your feedback. Timing, everybody gets uptight about, you know, if I'd only had bought then, or if it just turned around just before it got to my target and then turned around and went to my stop loss. That happens all the time, you know. People give up too quickly as well because they don't give their system long enough, because usually they've risked too much. They've blown their account because, you know, they haven't stuck to the rules. They know, for instance, with the proptrade.com, they're not supposed to risk more than 3% on a trade. They know that. They accept that, but still people do it. In past life, people have, you know, known, you know, they shouldn't be risking 20% on a particular trade. But this one, Stuart, this was going to win. This one was going to win, but it didn't, and it blew my account. This is the one that was going to win after I'd had a series of losing trades. So if you're risking too much, you never get your, on each trade, you'll never give your system long enough to see whether it's going to work or not. You need it probably, you know, at least 100 trades, I would say, to see if your approach, your particular system is working. If you're copying somebody else, or you've found something that you think works, you know, and you're risking 5 or 10% per trade, you're not going to get enough real trades with real money in real markets to give you that statistical confidence that this is good enough. As we saw, you know, on average, you know, 62% win rate, which is pretty good. Average, you know, the average traders, brokers have about a 55% win rate, between 52 and 55% win rate. The problem is the 45%, the 48% of losing trades are far, far bigger than the winning trades. So they end up, you know, going bust. People don't write stuff down anymore. They expect it all to be given to them by their broker or their platform. You know, writing stuff down, you're physically writing stuff down on a with a pen and on a piece of paper has a different part of the mind to typing it down. But at least typing it down, at least it's down, you're doing it, you're remembering it, it's getting processed into that subconscious of yours. And then the other thing I found absolutely flabbergasting, that people don't understand or accept, you know, what they're doing. They don't know what a pip is. They don't know what lot size means, or what risk management is, or what's the spread on this particular asset. Or there was lots of chatter over the weekend on our platform about trading over the weekend, and it's like, guys, yes, you can trade over the weekend. Yes, crypto is available 24 hours a day, 7 days a week, but think about who's trading at that time. The big institutions are closed. You're not trading with the big institutions, your players. You've got, you know, the more, how can I say it? The more vulnerable and the more unreliable and skeptical players are out there on the market at the weekend. So be careful about who you're trading against when the big markets are closed. Understand what you're doing. It's your money. Respect it. Even with, you know, when you bought even the smallest account, you know, you've spent $50 or $40 to get the smallest $5,000 account. You know, that's your hard-earned dollars, guys. Look after it. Respect it. The market won't. The market goes up, the market goes down. It doesn't care who you are. It doesn't care where your stop loss is or where your target is. It goes up and down. It tries to fulfill all these orders that are out in the market. It doesn't give a monkeys about your emotions, your fear and greed. It just does what it does. So I've done all 12 of those things. I sound like a right old preacher now, aren't I, on my soapbox? But I've done all of these things wrong. I've risked too much. I've gambled away. I haven't kept records. I couldn't cope with losing. I couldn't cope with being wrong. I did have a plan, to be honest, but sticking to it was a bit. My ego got in the way all the time. I've done all of these things, guys, and risked too much. I say expected too much from the account that I'd opened. Over trading, couldn't find what was right for me. It took me a while to get that right. But once you get there, once it went ping, once the light bulb went off, once I realized it didn't matter you were being wrong, you got to be wrong all the time. You're going to be wrong a lot, mate, if you're going to want to stay in this business. Once that went off, it was like a weight being lifted off my shoulders, honestly. And I've done this presentation many, many years, and I've written this up and put it on a Facebook page before. I've put it out on the internet, on X as it was before, Twitter as it was before. And these are all the sort of things that people write back to me. Get greedy, lack of knowledge. I realize trading is all the time increases risk. Most people fail because the position goes accordingly. In the next position, they can't apply full rules. They just enter because they think they know everything in the market. Not trading with a stop loss, not trading with stop loss comes up all the time. I'm not going to read all these out, but these are the things that people have wrote to me that they get things wrong, chopping from one strategy to another, over trading, trying to chase every single position, not managing your lot size. Again, as I say, these are all real life people, all people I've met, shook hands with, and traded with as well. So for me, focus on three key things. You've got to know yourself, understand your belief pattern, what makes you trade, why you're trading. Risk management, absolutely vital for your success. Do what's probable. It's all in the numbers. Think in percentages. Key three things. So knowing yourself, timing. So when do you want to trade? When can you trade? I can't answer that question for you. Some people want to sit and trade all day. Some people want to always trade between 10 and 11. Some people want to trade the open of the day, wherever they are in the world. Some people want to trade just at the end of the day. Some people can trade every 4 hours because they're working full time, but they've got time. They've got breaks where they can go and check things, so they can be disciplined. Right. So, trade when you can, not necessarily when you want to. Look at what's going on in the market. Look at the time zone changeovers. Look at the what's going on that particular day. Now, how emotional are you? Be honest. It's understanding your belief structure. As I said at the beginning, we are dominated by our emotions as human beings. Again, wherever we are in the world, some people are more emotional than others. But the key thing that drives market is fear and greed. It's one coin. I haven't got a coin here. It's to say one coin, just which side does it drop? You either drops down and you're scared to take the trade because you've had too many losing trades, or it just doesn't feel right, just stop. It drops on the greed side because you've had a few winning trades in a row, and you think you're the king of the world, the top of the world, and nothing can go wrong now. This is easy, this trading lark. I've been there. It's keeping all of that in balance. As far as hope and regret are concerned, you've got to get rid of hope and regret. You can't regret a loss, or you can't regret missing a trade. You can't open a trade and hope it wins. I hope this one's a winner. I'm going to pray for it. You see that alternative, people praying, let's pray this one wins. With all due respect, guys, this isn't trading, isn't for the hopeful. It either wins or it loses. As we said, when it loses, you want it to lose small. When it wins, you want it to win bigger than it loses, and massively, hopefully. And it's as simple as that. So get rid of hope, leave hope at the side of the trading room. Hope dies last, but in trading, abandon hope. You either win or lose. Fear and greed. You fear a loss, you fear missing a trade, you fear losing a profit. That's the worst one, isn't it? Where it's been in profit, or it's suddenly gone into profit. It's not quite got to your stop loss. It's turned around and it's gone blah, 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 through your entry and then blah, 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 hit your stop loss. And think, oh my God, that's just awful. Or you've missed a trade. Well, so what? There'll be another one coming along. I've got a 4-hour trading platform. I missed the 2 o'clock. I've come in at 3 o'clock, but there's all these trades triggered at 2 o'clock. Do I take them at 3 o'clock? No, because it's not 2 o'clock. It's 3 o'clock. things will have changed. Wait, for your strategy, for your time frame to complete. I'm an end of day trader principally. I trade around the close of the market, 10 o'clock here in the UK. That's what I do most of the time. Sometimes it's earlier, sometimes it's in the morning. If I haven't seen it, I'll get in up 6 o'clock, see what's happened overnight, trade the longer time. So, greed doesn't make the market. Greed can kill you. Gordon Gekko in the famous Wall Street film, didn't actually say greed is good, but that's the quote that's been taken away over the years. And I was similar. Back in the late 90s, 2000, it seemed really, really easy to be trading. There was a massive internet bubble. The internet had just been it was just rolling out really aggressively. I'd made a lot of money in the telecom sector because telecoms was the backbone of what was going on in hardware. That's where I'd come from, and it seemed really, really easy. We're putting 5,000 here, 10,000 there, 20,000 there, and it's all just going up, a bit like we had with the boom of Bitcoin originally as well. But all came back down very, very quickly in the first quarter of 2000. A lot of it disappeared. So trade where it fits your personality and your time frame. It can be easy, can be simple. For me, longer term frames means less emotion and better decision making. Reduce the emotion, this fear, this frustration, this failure. Sorry, this slide's actually from when I'm stood up on the stage. So, these are the guys. These guys, these free climbers. How do they deal with doing that? It's beyond my perception. These are free climbers. They knew how to control their fear. That's real fear, isn't it? Losing a few bucks in the market isn't real fear, is it? It is if you're risking, your last dollar. So we reduce the emotion, we reduce the fear, we control the fear, we bring it into the forefront of our brains. As I said right at the beginning, this business is a mindset business. So you get a mirror if you need to literally do this, and look yourself in the mirror. How do you deal with risk? How do you manage losing? How do you manage winning? As I said at the beginning, or I said earlier on, I found, females to be better traders simply because of their psychology. Two key things with make females psychologically more designed to be better traders than us men. Females are designed to produce the next generation. So therefore, they tend to, not always, they tend to manage risk better. They tend to be more protective as the nurturing case rather than risking everything. Men always seem to want to win everything, always want to be best, always want to be top of the shop, always want to be leader. I know best. I want to be the top of the team. Always in competition because of this testosterone that's buzzing around the male body. That's why there's so many wars in the world, so many so few female leaders in the world. It might be a much more peaceful world if we had a few more female leaders, few more both in politics and business as well. And then secondly, they tend to, again, not always, accept losing better than men do. Now that's the thing, and if you're going to have you're going to do something that you lose a lot at. You've got to be able to deal with that. And women tend to be able to accept losing better than men. So they have these two fundamental psychological and physiologically, a lot of it benefits over men to be better traders. But I also know lots of females that do a lot of risky trading as well. So it's not a blanket position, but certainly females physiologically certainly designed to be good traders potentially. Look in your mirror. That's your competition. It's not your broker. It's not a sudden announcement on Wall Street or Trump sending something out or something happening like we had the in Japan with the elections in Japan. That was a lot of that was expected, and it's just come in as expected. It's you. It's how you deal with it. Okay. This is I've taken this from a slide by from Tom Hugard, who's written a really, really good book as well about best loser wins. These next ones are from that. Sorry, let me just check what time are we? Where are we? We're 1:45, so that's sometimes okay. About reducing fear and reducing pressure on yourself. You know, I let my losses run. Why? Because you're living in hope. What you're trying to do subconsciously, and that's what the little voice in your head, you're trying to avoid pain. Our brains are designed to keep us safe. That's how they developed over millennia. Okay, so by keeping us safe and avoiding pain, it thinks it's doing the right thing. So my indicator says I've got to keep the loss. You're avoiding pain. I'm losing, so I increase my stake. That's just asking for trouble, isn't it? You're trying to get back to even. Why? Because you're trying to avoid pain. I'm winning, so I reduce my stake because it take the pressure off. So I've got it's winning. Instead of adding to your position, you'll close the position off, so it takes the pain away. You're actually out of the market. You know, I made my target, so I stop. Afraid of losing what I have made. That's again like we talked about before, the fear of losing. You know, Tom talks very much about adding to winning positions because you know you've been you know, as soon as you open a trade, your position will be in loss because of the spread. So it takes a while, whether you're going long or short, for the position to move in your direction. So what a lot of, unfortunately, what a lot of people do, especially if they're trading short term, will be watching it all the time. Unfortunately, you know, and as soon as it gets into a positive, they'll close it because it takes the pressure of it, takes the pain away of losing. They suddenly made money, so they've closed it making $10 and think they're great, whereas you know the position could have run to make $100, $1,000. You know, and then people trade on emotion, you know, with no plan, no conviction. They trade out of fear of missing out, the fear of scared or you know, bored, or they, you know, just got something to do. It's a Monday afternoon. There's nothing actually happening. There's no news driving anything. So you know they'll feel like they've got to trade. You know, fear of that old fear of missing out. I call it PDC. These are my three three keywords: patience, discipline, control. If you can get that in your head, along with you know keeping your losses small, you'll be like 99% of the way there. You'll be you know better than 95% of all people that trade. You know, patience is bitter, but the fruit is sweet, said Aristotle. You know, so you got patience. You know, let the levels be hit. Let your indicators complete. Let the candles close, for heaven's sake. That's what again, loads of people I see seeing their yeah, I'm trading on the 15-minute candle, Stuart, but you see them closing after 10 minutes or 5 minutes in the candle that's currently up. Well, I thought you were a 15-minute trader. Yeah, well, you know, it was going my direction. You know, ultimately, they end up beating themselves. People don't stick to their plan through thick and thin. You know, it's okay when you're on a positive run. Can you cope with it when you're on a losing run? Because winning trades can come along all at once and cluster them. You know, like losing trades, you feel like you're the worst possible trader in the world. You've got to be able to even out that the roller coaster, the waves, as I've talked about, and on the sea. You know, but most importantly is actually the control of your emotions. Emotional intelligence is what we're looking for successful trading, longevity, not you know not intelligence, not artificial intelligence, not intellectual intelligence. It's your emotional control to be able to manage that fear and greed. So even if you're trading with a robot or following rules or copying somebody else, you've still got to either code it or trade it manually. So that fear and greed, that human instinct comes in all the time, you know. So how do we do this? Well, we reduce our risk. And as Larry Hite said, and many more traders, you know, I don't trade for excitement, I trade to win. There's 1% rule. So risk 1%, 2%, 3%, but not much more than that. And you stay in the game. You know, in the current our world we live in now, impatience is everywhere, and it's getting more and more so every day that goes by, and everything's in a rush. AI has just generated that instantaneous. Anything can be done. You don't have to know anything anymore. You can code everything, ask AI, and it'll do it. So if that's the case, why isn't everyone a successful trader now? Why aren't there like millions and millions of successful traders around there with this explosion of AI robots? There aren't. Banks still employ thousands and thousands of physical people to do physical trading. AI is just another tool. It's going to change things a lot, increase productivity all over the place in all sorts of businesses and all sorts of jobs, all sorts of roles. But it'll also create whole sorts of businesses and all sorts of roles that we never thought could possibly exist. It's happened before. It's just happening more quickly this time. So, do this stuff. Journaling, AI will help you with that. Patience, practice, visualize, wait, delay. I've wrote there my first trade, my 300 pages story there was, it was sent to me in the post 30 years ago now. You opened it, great big thick thing it was. And the first page was a bit of information, and it said, stop now, wait for 24 hours before you turn over. How good were you? Obviously, I couldn't. Most people didn't. They turned over on the next page, and that's the point, doesn't it? Coping with losses. What do you do? How do you trade? Relax, breathing exercises, all sorts of ways around. All of bullet points there. This idea of the elastic band story of mine, where I had an elastic band around my wrist when I was trading actively, and would just like ping it to just bring me back down before I actually press the buy or sell position. Another thing I've done is having my trading platform may be here straight in front of me now, but to actually place the trade, so the analysis might be done here. I would have to get up. It wasn't this room actually. It's a room very, very similar, not much bigger than this, and physically walk across the other side of the room where my actual trading laptop was to actually place the trade. And just that delays maybe calm down a wee bit, physically lifted the body up, and helped me do this. Does this trade work? The old turning the laptop upside down. When I've used iPads for trading before, and turning it around sometimes. Does this market, would I take this the opposite trade if the market was going in the opposite direction? Does it look as positive upside down as it does the right way around? Alternative. Would you buy when I'm looking to sell? Focus on something else. Don't let trading take over your complete life either. Find the thing that works for you, whether it's capital, the time frame, the asset. Concentrate on one particular thing, master one particular thing, whether it's a trading approach, whether it's a particular asset, whether it's a particular day. I know a lot of people just trade the midweek days. Some, as I said at the beginning, some people just trade the opening of the market, the closing of the market, Friday night on the close. Find what works for you. Our hour is nearly up, and I'm going to actually just wrap this up now. I'll come to the stories of Richard Dennis and William Eckhart. We'll look at the Kahneman and Tversky's risk trading psychology and risk management next time. We'll also look at some. We'll also look at. Let's go back. We'll look at some numbers as well. How to look at the risk management numbers as well. Okay, so I will wrap that up now, and we'll do a risk management one next time. If there's any questions, I don't know how many of you are here actually tonight. I will do this next time. Okay, so thank you for your time. So just in summary, just go to the end of my slides here. I've shown you these books through the session. These are probably my 3 favorite trading books of all time. Do get them, find them. You can get them as PDFs, but they're worth $20 each. If you're serious about trading, dig them up, find them. Trading in the Zone. If you had to buy one of those, get Trading in the Zone. Reminiscent of Stock Operator. It's a bit of a wordy read. It's a funny read because it's written and it was written over 100 years ago now. 1923 it was actually published, 102 years ago. But it's a fantastic read, story of Jesse Livermore, the boy trader. Mark Douglas, the guy that's written Trading in the Zone, unfortunately died a few years ago. But this is another great quote from Mark. When you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each moment, your frustration with trading will end. It's a bit wordy, but that was Mark's approach. It's all about acceptance, having this edge, and understanding the uncertainty. Every single position has an uncertainty. We have no idea what's going to happen when we open the trading platform. Accepting the risks means accepting the consequences of your trade without emotional discomfort or fear. So 7 steps from Mark. Stay focused on what you need to learn. Deal with losers. That was the first big lesson I learned. Become expert at one market behavior, whether that's trending, whether it's risk management, whether it's risk aversion, whether it's mean reversion. Have a plan and execute it without thinking. That's what he meant by flawlessly. Execute a system, follow the system. Thinking probabilities, be objective, and learn to monitor and consequence. Obviously, a lot of this now is automated, but certainly thinking in probabilities is a human concept. And 2 of the books, I said, more recent books, Tom Hougar's Best Loser Wins talks about the psychology of trading, absolutely 100%, and as does Steve Goldstein's Mastering the Mental Game of Trading. Steve talks about his 4-step process. Tom talks about adding to winners and just trading without thinking, trading with as least emotion as possible. Okay, so thank you for your time. We'll finish. We'll do a bit more on risk management next time. Just remember, it's all about you. And if you keep your losing trade small, you live to fight another day. So thank you for your time tonight, everyone. Take care, stay safe, and I'll see you all tomorrow when we're going to look at how to build a profitable trading routine. What do you do on a day-to-day basis to be successful? Okay. Our website is theproptrade.com. We love what we do. We're here to help you guys, and as I say, our our products start from a $5,000 account for less than $40. There we go. Sorry, actually, $5,000 account. And if you're new, if we put in new 25, gets you a 25% discount off that. $55 brings it into around about $40. But if you want a bit more capital, a $25,000 account, which is our most popular, will cost you around about $130. Still respect, as I said earlier, still it's not a lot of money, but still respect it. You've got a massive amount of capital, $25,000 for $130, but still respect it, and trade in a disciplined and functioning way that works for you. Find something that works for you. So anyway, on that note, I will leave you. Thanks for your time, everyone, and take care, everyone. We'll see you again next time. All the best. Bye-bye.